All right, hey there, good morning everybody. Christopher Franks with Texas West Capital. It's just after 11 a.m. Central Standard Time here on, Tuesday the 23rd of February 2021. San Antonio, Texas, a rather warming day, thankfully, about 70 degrees out there. We're doing all right here. You know, the state, it was crazy, man. Areas getting, 3 or 4 days of power outage. Thankfully coming at the end here rather than the front of it. I knew people who got that at the front of the storm when it was really, really bad. But even Galveston down there on the coast, it's a beach town, blanketed in a layer of snow. So crazy times here. ERCOT wasn't prepared for the type of cold that we had. You know, it froze up a lot of the natural gas pipes and whatnot. So just a lot of stuff for the state to learn from after this. But, the fact is we usually don't get weather like that. So anyway, that's why I wasn't there on Friday. But we are back here today just getting everything going and trying to get it all back up and running as it was before. So hopefully you guys have been all right, been trading safe. Hey, there's Stefan. Good to see you. Hank's here. Esteban, is that Pratik? Good to see you. Will I give insights for Bitcoin? Yeah, we're going to look at Bitcoin, stock market, maybe some precious metals, oil, stuff like that. Sure. Hey there, FarmD. Good to see you, man. Crypto Mowgli, hello there. Universo is here. Spooky DC. Hey, good to see you. Pledge Shield checking in. Data's here. Nivlusian and LXT as well. Hey, listen, guys. If you're new here or you haven't joined yet, you're waiting for craziness. Come on and join us, howtotradetowin.com. We'd love to have you there. A ton. I mean, it says 30 hours of educational video content. It's probably closer to about 60 hours now for Tier 3. Trade setups across all the markets. We've got about 20 different assets that we update on a daily and intraday basis. We added just recently the four... what do you call them here? Right here. I'm sorry, Alt Perp, DeFi Perp, Exchange Perp, Mid Perp, and Ship Perp. Crypto indexes. So we update them twice a week. So that's there as well. We're looking to add in a few other things like Bitcoin dominance and crypto market cap and, a few other things as we continue growing here that we're going to add into the daily updates. Maybe... times throughout the week, a couple of times throughout the week kind of updates or whatever, depending on what we need here. But the idea is to help give you guys enough information that you can hopefully trade more effectively. But at the end of the day, guys, some people, they don't want to join because they're scared. I often talk about things that make people uncomfortable. But guys, at the end of the day, I'm not here to blow smoke up your rear end. You can get that for free online. I'm here to give you, an analysis of what's going on and the possibilities so that you're not stuck here being just emotionally hinged, on Bitcoin going up, because then what happens when it doesn't? I mean, right now, wouldn't you love to have gotten out back there around 60,000 now that we're down in, mid lower 40s? I mean, and the further this goes up, the larger and faster these things will happen, these pullbacks, if they're just pullbacks, you'll go, you'll drop 10, 15, 20,000 on a pullback. Wouldn't you love to get out closer to that rather than just holding on as it hopefully continues to go higher? And, that's the goal here, guys. I'm not here to convince you that the things that I'm saying are correct. I'm here to explain to you why I think the way I do, what things I'm looking at. How do you read it properly? Again, guys, people think that this QE is inflationary, yet it's been anything but for over 10 years now, guys. If you are still holding on this hinge that QE is necessarily inflationary, you haven't been paying attention. You've got 10 years of data, 11 years of data now that prove the opposite. It's deflationary. But yet we still see the memes going around online, guys. So, I'm just here to try to help you guys, understand that better, especially there in Discord. So we'd love to have you there. Come on and jump in, guys. It's a great place to be, I think. Then again, I am kind of biased. We got such a great group of people in there. Let me see here. Hey there, Train. Good to see you. Dominicus is here. Spiral Architect showed up as well. So, we've got this drop here again from almost 60,000 here, 58,000 and some change. We had a pretty quick drop down here to around, 40, almost just below 47,000 here. This move up here, and then the drop overnight down here around, 44, 45,000. I talked last night and yesterday with our Discord members, the updates that I do, and I kept leaning on the idea that this is probably not done here, that we've got further downside, and where we were headed there. And so we did, again, we got this rejection up here, but this cluster, and it's just kind of continued to fall down here, trying to find some support around the 15-minute S1 pivot here. And I mean, if we read this, if we count this, it looks like we've got, 1, 2, 3, 4, 5. So that gives us a 1, 2, 1, 2, 3, 4, 5 gives us a 3, 4, and then a 5 potentially here. So I mean, it looks like we could potentially have an A, B, C is done. But you really wanted to show you that, and in order to do that, what you need is a move above wave B up here. If this is going to be an ABC, then price moving above wave B up here at $55,043 would be a good clue, a good confirmation that the ABC is done. And then you get that move up. There's always so many other things that could happen. Again, you could have an ABC down, and this could just be A. You could have some large extended kind of correction going on here. We've got an ABC down, and then you'll have an ABC up for a flat, and then you'll have 5 down for C. Or, you can have, this could be ABC of A of a triangle. So the first thing you want to see is, does price get above your wave B area? Now here's the thing. If we continue going lower, then things start getting interesting. Because at that point, you put on your extension tool here, your fib extension, and you can see that right now, price is between that 78.6 and that 100% of wave A right now. At those lows there. But if you're dropping down through that and you're continuing down here toward, $36,090, which is the 100, the 1.618 or the 161.8% extension of wave of this first wave here, all of a sudden this starts looking like a 1, 2, 3 rather than an ABC. So, the one thing I'd be looking for if I'm looking at this as an ABC is some kind of bounce or reversal out of, between where it is at the low there and this S2 15-minute pivot down here. Now, the importance of this area, if you guys were hanging around when we were talking about it back over here at the beginning of February, or I guess about 2 weeks ago, as we got to the top here, I was talking about, looking for, because we've got this, let me kind of zoom out here a bit so you can see a little bit better. We've got this trading range here. We have this move up, and usually what you look for is a pullback to the previous resistance to test this support and then a move up, or some kind of move down into it about halfway, 3/4 of the way down, and then move up, if you're going to be bullish. And we didn't have that here. Instead, it kind of just pulled back a bit here and then went up. So it coming back down here to retest this area makes a lot of sense. It's coming over, to test this previous swing low here. If we can get it down here, would make a lot of sense. Now, if we just look at the 1 hour here, if we're just looking at pivots, what do we have? We had this drop down through the pivot through the S1, bounce back up, gets rejected at the pivot, drops down through the S1, pushes up. Right now is getting rejected at the S1. So again, if we're dropping down below that swing low, we should usually look for that S2 pivot as the next target. And that'll put you right around, again, this previous resistance as support kind of area here. Where things get, again, wonky is, do we get this move down further in here? Do we get this move down toward mid-range here? You can see that 36,090 is right about mid-range. And again, it doesn't guarantee that it's still not an ABC there, but it sure as heck starts looking like it. And more importantly, forget just that. If we actually, again, zoom in here to where we're at, if this is, I've got 5 waves down. So if this is 1 and then this is 2, or even an A, B, C getting up here is 2, pulling back then, all of a sudden you start looking at, let's see here, if we get this around, where this starts right there, and we pull it down to here, then all of a sudden, let's do this. There we go. We measure this out. So right now we've had almost a 50% retracement. So let's say it continues up here and we get up here around, I don't know, 52,000. Let's say 70 and a half. And then it reverses and heads down. Well, all of a sudden, if this is a 1, 2, and then this is a 1, 2, all of a sudden this secondary 1, 2, you get a 3 down here at around 35,500 and a wave 5 down here around 31,634. And in that case, that's only this 1, 2, 3 then down here. Which means you get your 4 up, which means you get your 5 down here below 30,000. And as 5, that's either a 1 or an A. If you're bullish and price was to get down there, what you're hoping is that's an A. You'll have 3 up for a B, and you'll have 5 more down for a C. So, price could, terminate 20,000, 16,000, something like that. That's only if it continues down. You'll have to see how this continues to play out here. But right now, price is having a little bit of trouble at the S1 pivot, and that's something to pay attention to, especially as you can see here, the 1-hour Stochastic RSI is up and overbought now. Now, again, right here, you've got some bullish divergence down and oversold here. This was a great point to buy if you were paying attention, because it is bullish divergence in oversold. And so that would have gotten you the buy here, in this area, and then of course you could have ridden it up at least toward the S1 pivot right now. If what we're looking at here locally, let me get rid of this. It is possible this is, let me zoom into the 5-minute here, that this is maybe 5 up here. You can go 1, 2, 3, 4, 5 is 1, 2. And then you can maybe go 3, 4, and then, you get your 5 up here. But it's also possible you can look at this as an A and a B, and then again, you get your 1, 2, 3, 4, 5 up here for a C. So, I mean, it's not a clear count right here. We've got 3 down, and then we've got, looks like maybe 5 up. So, this could be like a 1, 2, 1, 2 here. And if that's the case, you've got a minimum, wave 3 up here at 53,464. That's that local count there. If it gets above this swing high here at 49,750. But again, the other possibility is that this becomes just, A, this is B, and this is 1, 2, then you have 3, 4, and a 5 as a C. So that's why I say, until you're getting above this wave B up here, you're still significantly vulnerable to further downside, which can change this from an ABC to something much larger as a correction. And, when you look at things like Tesla taking a huge, huge shot here, ever since they mentioned their Bitcoin buys, they've been going down pretty well. Sailor has been taking a huge hit, MicroStrategy there. These are your big Bitcoin buyers, especially more recently. These are always skeptical areas. I know you guys get excited because you need these larger players to come in to really kind of move price up. But this other side of the sword there, as I've continued to explain, is that all of a sudden you've got concentrated supply. And so if they decide to sell, guys, don't believe, when you got people of that size saying, oh, I'm never going to sell or this or that, don't believe them. You wouldn't believe your buddy if they said it. You'd be like, yeah, sure, I can envision a situation in which you would sell. So, you shouldn't, you guys, you tend, just because these guys are in here making all this noise, you tend to believe, because you want to believe, because you need to believe, because you need price to go up, because in your head you've already spent all that money you're going to make, right? So you need price to go up. And they go out there and they feed on that. They tell you what you want to hear, and so you tend to follow them. I mean, the biggest thing, guys, everybody's got these stupid lasers in their eyes on their profiles, right? we talk about noting, when market tops are kind of around, what kind of things do we look for? What is the true gauge of sentiment? How do we really see it? Something like that is a good measure. When you have everybody all of a sudden jumping on this bullish, laser eyes, nonsense, hype, it's just, guys, I really just don't get it. I don't. To me personally, it seems very childish and not like people are very serious about making money. It's very emotional. And so when I'm looking at sentiment and I see this whole Twitter lights up with everybody got the stupid laser eyes things going on, to me that says, hey, listen, this is probably a good time to at least take some profits. It might not be the top, but it is a top of some sort. And sure enough, I mean, this has been the move from then, right? So far, from everybody doing that here, price has already dropped 23%. Now, you guys might jump up and say, but Bitcoin 30%, pullbacks are the thing and blah, blah, blah. Well, yeah, maybe they are. But nonetheless, wouldn't you rather have sold up in this area and been able to buy down here rather than losing 20% of your value right there? You could have locked in those profits, and if you decided to buy down here, bought down here, and, again, bought in at this lower rate than where you got out. So that means you could, if price is going to continue up here, you could make all this money once more. But you could potentially do it even more because, again, time and compounding. You would be able to compound because you've got more in your capital account now. But, this is if you're trading, guys. If you're an investor and you really believe price is going to 100,000 or something, as an investor, you maybe don't touch this. You just kind of let it do its thing and go up. But also, this market is a lot crazier than most. It has a lot larger movements because of liquidity and, lack of regulation, all these things. And so, it makes these larger moves, which makes it even a bit more difficult for investors to kind of really hold on with real good conviction, something more than just simply hope. You never want to be in a market where in a position where you're hoping. If you're hoping, you've already lost. You need to have a clear plan of what you're going to do and how you're going to do it. As long as you do that and you stick to it, the odds are much greater for your success. It's when you don't have a plan or you don't stick to your plan and you start doing things off the kill, when you're emotional, that things really start turning out bad. Let me see here. Hey there, Boston Bun, good to see you. Glitch, thank you, sir. Good to see you here. Brian Riley checking in. Baker checking in. White R21, good to see you as well. This is kind of what we're looking at here. Now, the bigger picture to all this, remember, Bitcoin does not operate in a bubble, guys. And this is the one thing I seem to come across more with retail traders than anything else, is this belief that no matter what happens everywhere else, it's going to benefit Bitcoin. No matter what we say, inflation benefits Bitcoin. Deflation, Bitcoin's going to go up anyway. Economic downturn, everybody's going to flood to Bitcoin. And this doesn't make sense, guys. This isn't how things work. I mean, it would be great if it did, but this isn't necessarily how things work. And so you have to be realistic, guys. That's my goal day in and day out, whether it's here on the live streams, the public here, or with Discord. It's just to be realistic with people. And many times, because that is negative to somebody's bullish emotional bias, all of a sudden all the names come out and all the shrugging off and whatever. But if there's one thing I've learned, guys, and gosh, I guess it's been 26, 27 years of doing this now, is that you can't ignore, if you're going to ignore those things, you're going to ignore them to your peril. Regardless of what you want to happen, you have to look at what may happen, because then you can appropriately decide whether it's honestly a good time to get in or not, or if you should be maybe protecting some profits now. I don't mean just now, but at whatever time that you're in the market. Because what do we have today? Today we have everything dropping this morning. Equities down, being led by Nasdaq, which is tech heavy, which is being led by Tesla sell-off. If you guys will remember, a year ago when we were talking about this, I said that when we finally get the big, what I believe is going to happen with the big reversal and whatnot, it was most likely going to be led by Nasdaq. It was most likely going to be led by tech stocks, especially Tesla. I said, watch Tesla. When Tesla actually gets a real downturn, I said it'll probably take the rest of the markets with it. And things are stretched so thin, they're stretched so far beyond the extremes that we've ever had before. So much of our the indicators that we watch and whatnot, well beyond what it was during the great financial crisis in 2008, well beyond what it was during the dot-com bubble in 2001, well beyond, Black Monday in 1987, or even the Great Depression. We've got indicators right now, guys, that are well beyond anything that we saw during the Great Depression, during the height of the, right before the Great Depression there, 1929. And so, it only takes a sneeze. It takes just something to happen to really shake up the footing of the markets. And again, with these larger players, you have to understand that that Bitcoin is a part of their overall portfolio. And in their portfolio, they look at what are their riskiest assets. And if the markets become risk off, like they are today, the first thing, especially if it becomes prolonged, the first thing that these larger players usually do is they get rid of their riskiest assets, the ones that are most vulnerable to the largest decline. It's Bitcoin. And so this is something you have to be aware of, something you have to be really paying attention to. Because again, it's the whole idea that, yeah, it's great. We need that big money. We need it coming in order for price to continue rising. But what happens, right? All of a sudden, it concentrates all that supply into a few hands here. Remember, we talk all the time about price action and volume, right? And we talk about how it often it doesn't mean that everybody has to short. You just have to have a concentration of enough coming in at the opportune time to reverse the markets. So, is that happening? Maybe. Again, all the markets kind of taking a hit this morning. We'll see if there's follow through, through the end of this week. But right now, nothing's really looking all that positive at the moment. Let me see here. Crypto Mowgli says, perhaps the great unwind has begun. Perhaps not. Doesn't seem too far away, but the market gives what it gives. Exactly. At the end of the day, guys, the one thing that we often get caught up in, especially with retail traders, is trying to predict. Where's the top? Where's the bottom? All these things. But professional traders, it becomes a lot more of managing the trade. It's not about picking tops and bottoms. That's usually a fool's errand. I've said this so many times before. Most of the time, it's just managing that trade position. Is that particular trade profitable? Does it have further to go? Are we thinking long term? If we are, what are we looking for? But it's not about often, not so much about trying to pick a top or a bottom as it is just about managing the trade as it's going. So, this is kind of that position that we're in right now. Let me see here. Hey there, Christopher Arksky, checking in from, was that Canada? Good to see you, man. AC Webb, what's up, bud? Thank you, sir. TV Canales here. Mr. Arksky said he picked up 5,000 shares of BTCC.U. I can't even say it. Yeah, it should be interesting. We'll see how this goes. What do I think about ADA USTT? I don't have any thoughts on it at the moment. Remind me a little bit later, and I'll see if I can pull up a chart. And we'll see that. But, again, it's had some good run. It's had a good run here lately. I do know that much. So we'll have to check it again there. Hank says never a straight line up or down in the markets. That's right. It's always, it's always moving, guys. Contrary to what traders like, it's always kind of doing this thing. Again. It could be doing something like this, larger correction, and then going up again. And so it's always moving. And the problem is most, traders, they're going to buy in here and sell in here. Buy in here, sell in here. Buy in here, sell in here. and buy, sell along the way here and just kind of completely get messed up when it's going sideways. I'm telling you, the newer a trader you are, the larger your time frame should be, guys. If you're brand new to trading, you should be trading the daily, at least, if not larger. I would never go down below the 4 hour unless you've got some good experience. Because at that point, you've got a lot of noise. You've got a lot of this up and down that I'm showing you here on this short-term chart here that can change the overall, reading of what's going on. Let me see here. TV Canal says, yes, but the DXY still doesn't move, so it can only be a correction. Well, it did move. It went up this morning. Let me see here. Yeah, there we go. So we had this move up, and it was just a little move up, and you had those larger declines with everything. Now, I'm still looking at, overall at the DXY probably coming down to print a new slightly lower low here. Right now I'm looking at maybe, an ABC there, and then so maybe this becomes an A, and then so B would have to be an A, B, and a C up here to get your B, and you'll have C further down for wave 3, and then of course up for 4, and then ABC down for 5, give you kind of a an ending diagonal here seems to be maybe what we might see. But, until it actually happens, we'll have to see how it works out. But, something like this where, it gets down here below that previous 89 and some change there. Maybe just gets a bit lower here to do that. And then that gives us what would then be a double bottom here. And heads up maybe. You can still have this coming on down here. By the way, double bottoms tend to work out better if the second bottom is lower than the first. Sometimes, we'll get these double bottoms that, they'll kind of come down like this, and then they'll go up, and then they'll have a little higher low, and then it'll go up like this. But what we find is that the better ones are the ones that kind of come down like this and move up, and then you get a lower low, and then you get that move up. That lower low seems to make them print out a lot more like you expect with that. So, we may be seeing something like that printing here. As long as it remains above this swing low over here from early January, it's still possible that this is the bottom. But I think that's the lesser choice at the moment. But it's not a far way down to get down below there. Could it go further? Sure it could. Sure it could. And we'll have to see how everything looks after that, as price is printing down there. But right now we're kind of watching it this way to see if we get this move. I think the bigger thing here is definitely here on the daily with this. As you can see here, Stochastic RSI down and oversold. RSI nearing oversold here. Right now it's bouncing on this previous support level right here. RSI is right there around that 39.42 area. 40. So dropping down through that should then take it down into oversold here. And so, again, we've got a lot of overlap in this area, suggesting there is a bit of rotation going on, from the sell side to the buy side, which again would be another reason why it may not go down too far. Maybe, again, I don't know for sure, but right now we're looking at maybe just getting down a bit lower than that previous swing low there as an ending diagonal, as people finish out that rotation, enough to get this really into a definitive upward movement. So, that's what we're kind of watching at the moment here with this. Kind of get rid of some of this other stuff here. With that right there. Let me see here. TV Canal says Tesla bear div at the monthly RS and W, the weekly RSI. The RSIs for the monthly and weekly. Yeah. They've had that large bit of bearish divergence. Yeah, I've covered that quite a bit. L. Howard says a Bitcoin whale sold for $156 million to prompt the first sell-off yesterday. Yeah, exactly. That's all it takes. That's exactly what I was talking about. It just takes the concentrated supply in a single hand to really get the market moving, especially when you get to these extremes where you're at in terms of what's going on there. 156 million, that's a great bit of profit. You stick that in your pocket. Now Are they buying up here on the, hoping for, some further upside? Maybe. We don't know for sure what they're doing. But we do know that all it took was that one person to prompt this right here, and there's just been continuation afterward. The further this thing continues to drop, the more selling you're going to get, because people are going to become more concerned. Again, on the first bid here, it was buy the dip. It was buy the dip. It was buy the dip. It was, oh my God, we're all going to die, but now buy the dip. Oh, you should. And it gets up here, and you have this big wick. Remember, you had this big, great daily wick here. I discussed this with Discord. I said, when you're looking at this is a great wick here. But you need to have follow-through. If you don't have follow-through, it becomes an issue. Well, what do we have today? Now we have we have more supply coming in today. So your volume profiles are popping up here. And we've still got another 7 hours or so left in the day, right? 6-7 hours before the daily candle closes. So we've got an expansion of volume. And right now you're getting just a bit more effort, but much greater result here right now. You have a much larger candle spread here than what you had back over here. This is significant to watch. We want to see how this ends at the day. Because if you've got volume continuing to expand here, this thing can continue to drop on down. But again, at the end of the day, it only took one person to start pushing this down. That was only 156 million. Imagine if you've got somebody like Tesla or MicroStrategies out there selling every 30 seconds. Remember, everybody's all excited. Oh my gosh, he was buying every 30 seconds. What if you've got that going on the sell side now? But as long as the big accounts you guys are watch out there continue to say buy the dip unabridgedly. They say buy the dip, buy the dip, buy the dip. Guess what happens? If you've got people with deep pockets who are trying to sell, all of y'all continuing to buy the dip are doing nothing more than filling their shorts. You're giving them the ability to sell into all your excitedness. Again, that's what usually happens when you're looking at, market tops. We talk about that here. Here, retail get FOMOs in and buys here, and they just get sold into here. Drops down, pushes back up. They're buying again. Look at that big wick. They're buying again. Gets sold down again. Gets sold to again. Boom, buy. Another, still coming in strong. Still being sold into. And then it gives up after that to get that move down there. Again, same idea here in June of 2019. Sold into up here. You got all this FOMO, these large candles, these large volume. All this large volume is selling coming in into all that FOMO, the FOMO demand coming up there. These are 3-day candles. So over this week, basically here, you've got large candle spreads, large volume. That's a lot of supply coming in to a lot of FOMOing retail. And here's the thing. And so then it drops down here, boom, picks up again. They're selling more to you. Look at your volume still up there. Comes down over here. Look at how the volume picks up again. Right there and right there. So again, you've got more supply coming in. They're just selling into all that continuing FOMO. And so that may be something that's happening here. We're going to have to see how this continues to play out. Again, this is the 3-day here. And right now, this is bearish engulfing, it looks like. And let me see here. We closed at 55,923. We opened at 55,921. Not quite bearish engulfing. Opened up a couple of dollars short of that top there. But nonetheless, a large, bearish candle printing right there for right now on that 3-day. Again, large bearish divergence here from January through February here. Almost 2 months of divergence. Bearish divergence. Your Stochastic RSI is attempting to cross back down bearishly here. This candle opened on the 21st, so this one's going to end here, it looks like at the end of today. So potentially setting up that move, that cross, that bearish cross, trying to confirm this here. If we're looking here at the weekly, again, same big bearish divergence showing up. Same attempt to cross bearishly here, though, of course, this is the weekly, so, we're just at the beginning of the week. There's a lot more to go, so we'll see how the weekly plays out. Right now, finding support on that R2 pivot on the weekly. But, if you're dropping down to the weekly, you should be looking down here, the mid-30s, probably. Get you right into this weekly support area here. I guess mid to upper mid, lower upper. 37,000, 38,000 maybe even. As your next kind of target area if you're looking at the weekly. Again, another potential bearish engulfing candle printing here on the weekly. We'll have to see how it plays out. The monthly is the big concern here, guys. And I warned last month that we had this big, again, you have this spike of supply coming in and you have this very small result, right? So your volume is almost twice what it was previously, and your candle spread is about a third of the size of what it was previously. So a heck of a lot more effort, a heck of a lot less result, which tells you you've got a lot of supply coming in and taking over, right? So then you get this move back up. So it becomes worrisome if the monthly closes below last month's high. So last month's high is 41,986 and 37 cents. If this month closes below that, that's a warning sign. Because now you've got two large wicks on 2 months there, and we'll have to see how the volume turns out here. But, last month the volume was way up there. We've still got another, 5 days left this month. More significant sell-off coming could really, raise this volume here. But we'll see what happens. I'm not saying it's going to. I'm just saying this is what you want to watch. Become really concerned if it closes below last month's close. So last month it closed at 33,137 and 74 cents on Coinbase. If this month was to close below that, first of all, it gives you a down month. It closes, below where it opened for this month. Leaves this large, huge upper wick here, which is then in conjunction with this previous large wick, really just showing a lot of reversal potentially happening in the market there. And at that point, you might be looking at least at the pivot here, 21,000. Maybe even the S1 here, 12,000 and some change there on the monthly. But if we're getting those two large, and if this were to close, and again, I'm not saying it's going to, guys. It's got a long way to go to do that. What's that, 15,000 to get below that? So, the odds are likely that it's not going to. But if it does, you need to be paying attention because all of a sudden this looks like a top here, like a more major kind of top. Something that's going to get you a significant pullback. So, we need to pay attention with that as it plays out there. But for right now, again, locally, as I told you earlier, we're looking at the possibility that this is A, B, C, and done here. So now we just need to see locally if we drop below that swing low. And then we'll look at those lower targets we were looking at. Let's see here. Brian says a move up from here could be a giant bull trap. It's possible. It's possible. Remember, guys, even with what's going on here, again, this could just be an ABC, and then we get an ABC up, and then we get 5 more down as a flat. It could just be an ABC, and then an ABC, and you get this triangle going on. So you get A, B, C, D, E, and then pop up. So consolidation for, probably a month or something. But, these are other possibilities that aren't bearish like you would think. They're just corrections that are taking a bit longer to do, But again, if we're dropping down below this swing low, all of a sudden this is starting to look like, 5 waves down. And if we're getting 5 waves down, as a bull, the best you hope for is that you get those 5 waves completed and that becomes just wave A. Then you have 3 up for wave B, and then you'll have to have 5 more down for wave C. So, again, guys, you can be excited about, likely new all-time high if we're getting above this swing high up here at 55,000, kind of 55,000 area up here. But until that point, you're still extremely vulnerable to further downside on that. Let me see here. Still snow in Texas? No more snow here. At least not locally here, where we're doing 70 degrees now. Bipolar Texas weather. It tried to kill us last week, and then this week it's 70 degrees. So yeah. But other parts of the state, I'm sure there's probably still some snow, northern areas or something, Panhandle, North Texas, stuff like that. Where do I suggest crypto leverage trading for U.S. traders? First of all, if you're a new trader, if you don't have any real experience trading, guys, you got to be honest with yourself. If you don't have some system in place where you're consistently profitable over time, I would really advise you against using leverage, because what you're going to do is, without having that system in place, you're going to make these emotional choices while you're trading. And these emotional choices are going to cause you to lose money. A lot of it. A lot more than you normally need to, because you're using leverage. But if you absolutely positively say, whatever, Chris, you're such a fun sponge, right? You soak it all up and you just leave us with nothing. I think, the only one I've used with leverage that's definitely U.S. centric is Kraken. They had some huge wicks this past weekend, though, with or this recently here with Ethereum and ADA. I'm not sure. I've heard a lot of people say good things about FTX, the U.S. side, but I'm not sure if they offer leverage or not. I don't think Binance US offers leverage, do they? I'm not even sure who all offers leverage here in the US. If anybody knows, man, sound out there in the chat. It's just, there's a lot more regulatory stuff and whatnot that has to be done if you're going to offer leverage here in the US. And that's why, most exchanges don't do it. The laws themselves are just such a pain in the rear end that most exchanges don't want to offer any kind of services to US residents, because it costs them money to do so. You have to hire a compliance, and you have to make sure you're up to date on your compliance and, following all those rules and laws and everything. So, yeah. Let's see here. The Big Short is wrong about hyperinflation, ? One day I hear deleverage, deflation, then the next day I hear hyperinflation. How can people be on such different sides? Because most people don't understand the monetary creation. This creation of money is something that, is still, at least in these modern times, in the modern way we do it, is still really new. And so there's not a lot of idea about what all the effects of what they're doing is. Again, under Bernanke, the thought was that if you had low if you had low unemployment, interest rates would have to rise. And what we found out here coming into 2020 was, no, that's incorrect. We had record low unemployment and record, almost 0% interest rates. This idea, most people think, when they look at money creation, they go, okay, well, the Fed printed blah, blah, blah. And, look at the increase in the M1 supply. And so, it's a very rudimentary look at what's going on. Money creation is a very complex, a very deep subject with a lot of little narratives, a lot of little arms going out everywhere. So it's not anything that's really easy to understand. What we do know is that we've had deflation, that we've had QE, massive amounts of QE for going on 12 years now, since 2010, right? And inflation has rarely reached 2%, the government's official inflation number, right? As a matter of fact, they've had a hard time getting it above 1%. And in 2015-16 area, we were actually in deflation for a short period. So, if your argument is, all this money being printed via QE means inflation, well, you've got almost 12 years of evidence here that says that's a bunch of BS. Everything else aside, that's all you have to look at. Now, it's because of the way in which QE is employed and where the money goes. That's the big thing. Where does the money go? Basically, it goes to the haves. Those who own assets. Remember, QE at its most basic, guys, is asset inflation. Because the idea is that the assets inflate, which makes the markets look good, which makes everybody believe the economy's doing well and companies are doing well, and they're printing, and pumping more stuff out than what they should be. And so then people continue to spend. We are in a credit economy, guys. And so in order for it to work, it has to continue to expand. And the only way you can do this is by making the populace believe that things are handy dandy fine and everything's going to be great, and just continue spending and it'll all be just fine. But people aren't spending like they were, at least not through 2020 there, really pull back. Savings increase. You can't, if you're in a credit environment, if you've got debt-based economy, which is what we have, which is what pretty much everybody has these days. You live and die by credit expansion. You have to have credit expansion. And so if you don't, if you have people taking out less loans and smaller loans, that's credit contraction. If you've got people paying off their loans, that's credit contraction. By the way, when people are paying off their loans, that's dollar destruction. The dollars that you guys, when you say things like inflation, hyperinflation, stuff like that, and you think, oh, money printer goes burr or whatever, what you should be looking at is what kind of dollars are the banks creating, because those are the dollars that get out into this system out here, right? They're the ones that go and rotate around the economy. So your dollar creation comes from your banks putting out new loans. They're creating dollars with those new loans. So by the same but opposite token there, when you're paying back those loans, your dollars are going back in. They're not circulating anymore. So you're destroying the dollars that are out there in the economy. Contraction. So it's a very deep subject matter. And, the Fed right now has decided that, they're adamant about not going to negative rates. They're not going to go to NIRP, negative interest rate. Here in the U.S., they believe that they can do what they want to do via yield curve manipulation. And then you look at the front end, the back end, and everything else that's going on there. And, but at the end of the day, guys, I don't think really that there's anything the Fed can do to ultimately stop whatever's going to happen or to change what's going to happen. I think the best they can hope for is maybe to prolong what's going on a little bit more, but they can't change it. Because what happens is at some point, everybody just goes, listen, I'm not going to do it anymore. I'm stretched on credit. I'm scared I'm going to lose my job. I'm scared I won't be able to pay my bills. I'm not going to do anymore. And they stop. And the government goes, oh boy, what are we going to do now? We need that credit to continue to expand. So I think that's kind of the big thing there. The idea of hyperinflation, the big problem on that is that, the position that the U.S. dollar has in the world as a reserve currency. And then, of course, with the U.S. having the backing of, what is arguably the most advanced and sophisticated military on the planet, with boots on the ground in every recognized country in the world, which is just stupid, but nonetheless, these things give the dollar significance worldwide. When you look at who's actually gone through hyperinflation, we're talking about countries that have not had that. Zimbabwe, over there in South America, Venezuela. Even if you look at the Weimar Republic, but even everybody's cursory glance at the Weimar Republic back in the 20s is just a bunch of BS because nobody's even paying attention to what was going on already. They just say, oh, look, at that point, look, hyperinflation, so it was because of this. Whatever. If you've got a history teacher that actually explained to you what happened there, and you know better, you should give them a call and thank them because a lot of people didn't. But that's too big a story for right now to go into. So, again, when you're talking about hyperinflation, so much less likely in the U.S. than anywhere else right now because of these things, But deflation, is something that's been showing its head here over the last 10 years in the face of all this QE, which just continues going. And now we got Biden and his group trying to print even more money. By the way, when you're looking at just how many dollars are printed, and you're not looking at that in terms of gross domestic product and all these other metrics, I think you're really just doing yourself a disservice there alone. What kind of significant, you go, oh my God, that's so much money being printed, but what is it in terms of what's already out there or what's going on? And then what is that in terms of what's being done in other countries? Japan, Eurozone, stuff like that. And when you look at that, the U.S. is not at the top. The U.S. is, often third or fourth or something like that in terms of all those kind of metrics. Japan's usually up there at the top. Eurozone is above the U.S. So, when you look at currency valuation, is the dollar going to deflate or inflate? That's based on its value against other currencies. And as long as these other currencies are doing more in the grand scheme of things than what the U.S. is, then the U.S. dollar, the buck, becomes more preferable to those other currencies. So people go to it. They go to it. It creates demand for it. Value goes up, right? Let me see here. But yeah, as far as things like inflation and deflation and reflation and all these things, first of all, if you're getting your ideas about that from accounts that aren't using their real picture or their real name or whatever, first of all, be questionable about that. It doesn't guarantee that they don't know what they're talking about, but let's face it, guys, you're talking about significant economic and monetary ideas here that, are by somebody who doesn't even allow themselves to be known. So I don't know. I just, that's the first thing I'd look at. But even within that, again, you still have people in suits, people that make a lot of money managing assets and whatnot, still talking about reflation, this whole reflation idea. But again, it just comes down to, at the end of the day, the whole idea between bonds and rates and the real rate and, and interest and credit expansion and credit, contraction, all this stuff. There's so much that we really don't know for sure. That's the reality of it. Even the central bank, guys, do you know that the U.S. Central Bank has somebody that's hired specifically to be the antithesis to anything that the bank wants to do? They're actually brought in. They have their position to refute these ideas. Somebody will go in the central bank and they'll go, okay, yeah, we need to do this, this, and that, because doing so is going to lead to this, this, and this. And this other person's job is to find out why that's not true. So the central bank actually employs people in this position to kind of refute the things they want to say. But, again, the idea is there's so many moving parts in modern monetary creation that nobody really knows for sure what's going to happen. We do our best based on, things that we've noted. The central bank's hands are a little bit tied more than anybody else's because they have a job to do, the reason they were created. And so it's harder when you have that to kind of take on a new idea beyond where you already are. You're kind of like, well, everybody's always done this in the past, so we're going to continue to do that now. There's just, it's not an easy thing. It has a lot of moving parts, a lot of words that people don't know. What's repo mean? Stuff like, what's the repo rate? What's going on with that? What does that mean? All this kind of stuff. That's why there's such a big discrepancy there between, the ideas of hyperinflation or even inflation and deflation and deleveraging and reflation and all this other fun stuff. Yeah. How's the Nasdaq looking? What's going on, Cody? Let me see here real quick. I'll pull up the Nasdaq here for you guys. Let me see here. Oh, where is it? Nasdaq. Let's see. Actually, you know what? Let's start this morning. Yeah, dog it. Oh, let's see here. Nasdaq. What are we doing with the Nasdaq? Oh, that Nasdaq's hurting bad. Look at that. So big move off the top up here from about 13,900 almost. Down so far to 12,760 here in about a week or so. So that's a big move down. I don't see anything significant. Look at this right here. Look at what you're seeing here. This is the 15-minute chart here. Notice that we've got this large deep dip here into RSI, right? So we get this little bit of a move out of it, but look at how huge this move in Stoch RSI is. This right here, with just this little bit of a move here, resulting in such a large move in the Stoch RSI, tells you that there's significant sell pressure coming in. If I'm looking at this, I've got as basically as a 1-2 and then a 1-2. This might be the 3 here. I was looking for it to get down here around 12,713 because that's the 1,618. So if we go here and measure this off as 1-2, yeah, get you right there. But it looks like 3 might have stopped just a bit short here, which will only make this 4, which means you have 5 coming down a bit lower here. you know, potentially down here around this S5 pivot on the 15-minute here, which is 12,600 or so, 12,620. So, you know, you could be seeing a 1-2 here if we're looking at that. You know, if this is wave 4 up here, and then this is wave 5 playing out, we've got a 1. There we go. You got about a 1-2, which would give you a 3 right here around the, you know, this 12,700 area. And again, it gives you a 5 right here at that 12,625 right there around that S5. So, you know, I might right now be looking at this. It's 3, 4, and potentially 1, 2, 3, 4, 5 down here to finish off 5. But even that 5 at that point would only still be this larger 1, 2, 3 here. Is that right there? And so, if we're looking at this here as a 1, 2 kind of thing, that gives you a 3 down here at about the 2,618. That's a good place. You know, if you don't get the 1,618, we usually look to 2,618, then the 3,618, then the 4,618 for that, you know, wave 3 extension there. So that aligns really well with that 2,618 right there. And so, like I said, you know, at that point, that just becomes, you know, this larger wave 3, which means then you're potentially looking at something along the lines of, bring all this in here. Let's see. So then you move this back up here around 38.2, gets up back up here around, you know, almost as this wave 4 area here. So wave 4 at wave 4, that's usually something we look for. And then again, that gets you then a wave 5. Down here around 12,488 at least. It's that 61.8 extension of wave 3. And so that just becomes the first bit down. That's just a 1. And then you have 3 up for a 2, 5 more down for a 3, you know, and you start looking a lot further there. Another thing we look for is here, this wave 4 here, that wave 5, and now we're below this wave 4. So if this is a 5th wave done here, you know, this locks it done. This says, hey, we drop below here. So this can't be, you know, a 1, 2 of 5 because you can't have 2 dropping below wave 1. So if you drive up, you got 5 up, and then you come down below that, that says this wave is done, which means as a wave 5, that would be done. So yeah, Nasdaq leading the sell-off on the way down, really kind of Tesla leading that there. But I think it's significant in that if you look at MicroStrategy and Tesla, both taking these large hits, you know, losing a lot, which, you know, they've been rising pretty rapidly. You expect to have a large, you know, retracement out of it, but it doesn't necessarily bode well for them, especially if you have this dropping, and on top of that, not only do you have this drop, so you have whatever their values are dropping, and we can look at MicroStrategy right here. And you say, okay, let's be realistic about this. We were at a high here of $1,315. We're now at $695. Almost a 50% haircut, right? And on top of that, Bitcoin has dropped 20 somewhat percent, has dropped 58 to, yeah, almost 15,000, 13,000. That's significant, especially if you just bought. Now, you know, if you're further back here, if you're buying down here, you know, you've got a lot of room still to go here. You're still profitable. But the fact that Bitcoin's dropping in line, you know, in tune with you dropping as well in stock, that's not a good sign. That could cause issues for a company. And it becomes much more of an issue if Bitcoin continues dropping. Because all of a sudden, a company like MicroStrategy, who did, look at this, guys. Let me show you something. This was the dot-com bubble. They were one of the highest flyers during the dot-com bubble, and they were also one of the worst off at the end. They lost 99+% of their value. Almost went bankrupt. All they've done since then is, okay, so they get your, you get your initial bounce up there. But look at this here. This yellow box is the last decade. This is QE. Look at what they did during QE. They did nothing. They just went sideways. If you invested in them at the beginning of 2010 here or whatever, 2011, when QE started, you got really lack of any return over 10, 11 years, guys. Now, when you compare that to some of their competitors, I've only got a few of them on here, but Microsoft, well, we'll do it this way. Let me index this to 100 here. And this will show the relationship, what's going on here. So when you compare that to their competitors, here's CRM. Look at CRM taking off here from January 09. Did nothing, lagged, huge lag on what their competitors doing. Microsoft, boom, up again, still huge lag to Microsoft. If we look here, SAP. SAP actually went off up here and continued up here. But again, SAP was leading everybody into 2008 here, and then coming out of that, still leading, coming off of that. Everybody just kind of caught up right up around here, about around this August of 2019 area. But this is your outperformer in that business intelligence during this period. MicroStrategy's a lag. They're lagging everybody. You go up here and you put IBM. IBM was, again, the leader as well until right here about 13, and then it started coming back. But even as it was coming back, it was still better than what's it called here? MicroStrategy through about September of 2018. So what I'm saying here is, didn't do anything. If you were looking to invest in 2010 in that area, you in terms of opportunity cost here, you lost significantly by investing in MicroStrategy, whose shares continued to drop off. Last time I saw, I think they have about 2.13% of the business intelligence market share. It's continued to decline. So you got a guy that basically sucked wind for the last 10 years compared to everybody else, compared to his competitors, more or less, right? The only reason this goes up here is because he buys Bitcoin. So he is definitively tied to Bitcoin's success. If Bitcoin is a failure, if Bitcoin fails, if Bitcoin doesn't even have to fail, if Bitcoin just has a huge correction, I don't know, goes to 10,000, goes to 5,000 or something like that. That coupled with the overall markets coming down could be more than enough to potentially kick him out of business. But I guess what I'm saying here is everybody's idolizing him. They're making him into some sort of prophet. And at the end of the day, he was just some guy that didn't get much going. All his competitors were eating his lunch for the last 10 years. And the only reason he even got moving out of this just sideways movement here is because he bought Bitcoin. Which means his company, if he doesn't have Bitcoin, his company's back to what it is here, which is the laggard of the group. If you're buying stocks, guys, you don't buy the laggards. You buy the outperformers. You bought IBM up there, as I showed you, or you bought Microsoft. Or you bought SAP, I'm sorry. You even bought Microsoft potentially in this area here. You made hand over fist exponentially more than you would have ever dreamed of making here with MicroStrategy. You leave the laggards alone. You don't touch them. You go for your outperformers. But even with this move up here with Bitcoin, he still lags the group, basically. So I guess what I'm saying here is stop idolizing this guy and making him out to be something that he's not. As long as Bitcoin does well, he's going to do okay. He has a chance to pivot his company into some kind of Bitcoin company. But if it doesn't, if there's some kind of long bear market, especially coupled with some larger economic downturn, he looks bad. He looks really, really bad. Shareholders will leave his company in a heartbeat. And new ones won't be interested in joining in. It also, if Bitcoin were to correct from here, do some large correction, guess what? All these dreams of all these big companies kind of coming in, they're going to be put on hold for a while because nobody's going to want to come in seeing that how much Saylor put in here and how much Tesla put in, and the market still drops off, $30,000, $40,000 or something. If that were to happen. I'm not saying it's going to happen. I'm saying if it were. There's a lot going in with that. Kind of catch up with you guys here. Let me see. Sorry, guys. I see you've been talking a lot here. I'm trying to catch up with you here. Let me see here. Hey there, Bill. Good to see you, buddy. I've been tuning in the live San Antonio webcam. It looks pretty here now. Satoshi Ray wants to know where you can short MicroStrategy. Whichever broker you prefer to use. They should have some sort of shorting ability. Most of them do. Some of them don't. Some of them choose not to offer that. But any large, broker will have your ability to do that. As long as you are you meet their requirements to be able to do so. Yeah. Let me see here. Let me kind of catch up with you here. And then we've got Yellen. I see you guys are talking about Yellen. She's over there. She makes some really. These are nothing that you guys shouldn't be a surprise. She says, oh, Bitcoin's used and cryptocurrencies are used, in all these really, terrible, against the law, illicit fashions, the reality of it is the US dollar is used more for crime, for illicit purposes than anything else in the world. That's the reality of it. Cryptocurrencies have such a small share of that. But, people are going to hang on to that because the dollar is the backbone, basically, of the world right now, guys. And for those of you, I get it. We don't like the dollar. I don't like it necessarily either. But the reality, the reality isn't what you think it is. It's what it is. And the reality of it is the world runs on the dollar. For now, anyway. And as long as it does, in times of risk off, the dollar is going to be where you want to go. This idea that Bitcoin is necessarily going to be just fine if there's a risk-off environment doesn't make a whole lot of logical sense. Could it? Sure, but I have a hard time really fathoming that these large individuals are going to hold a depreciating asset, and not just that the fact that it's depreciating, but that they could go to something that's appreciating. They can go into the dollar and actually make money rather than hold some. Even if they really believe in Bitcoin, they can get out and buy it lower if they really believe in it. Or even just get out of Bitcoin and get into some kind of treasury that maintains the value of your some kind of security that maintains the value of your dollar. They could do that. The idea that they're not going to do either one of those things and just hold on to a depreciating asset, which is not guaranteed to go back up. It may, but it's not guaranteed, guys. Far from guaranteed. That doesn't make a whole lot of sense when you're talking about hundreds of millions or billions of dollars. Doesn't make any sense, guys. I know in your head it may, because you're retail. You're thinking about your personal view of it and what you have at stake and who you have to answer to. Things are a lot different for public companies. And remember, they need to have as public companies, guys, they need to maintain their credit ratings. They need to maintain their share prices as much as possible, because that allows them to be to have more flexibility in things they can do. If your share price is dropping, if the value of your company is dropping, it starts limiting what you can do, what kind of money you can make available, who's going to be interested in buying. Look, everybody's jumping on MicroStrategy, their $1 billion offer here again recently, because of what's going on with Bitcoin. They think, hey, listen, we can't lose, right? But if Bitcoin's going down, he's going to have a hard time convincing people to buy in. It's the same thing with your company. It's hard to get people to buy into your debt offerings if your company's continuing to have its value destroyed. Let me see here. Oh, let me kind of catch up with you guys here. What's going on, Onyx King? Onyx King's looking at the USD relative to the euro. Swiss franc and yen has been moving in a side range since 2015. Yeah, exactly. That's what gives the DXY its thing there. Again, euro's 57-58% of the weighted basket that's used to derive the value of the DXY. The yen's another 11%, so those are the two biggest. Your Swiss franc, I think, is about 4.2%, something like that, if I remember right. Of those currencies in that weighted basket. So yeah, it's not enough simply to look at the DXY and go, okay, it's doing this or that. What you want to do is you want to zoom into those Euro USD, USD yen, USD Swiss franc charts and see what's going on there, because those are going to tell you where the DXY is going, generally. So yeah, let me see here. Hey, I see you there, Onyx King, saying, hi, good to see you, man. What about side movement, relative stability of US dollar relative to other currencies, but lightly inflationary to respect to certain commodities like gold, due to push up that gold sees due to the fear uncertainty trade? Well, you have to, that's all an assumption. Again, I don't see gold the same way most people do. Most general retail traders and whatnot, and even a lot of the bigger traders out there, think that gold is some kind of inflationary protection hedge thing. I view gold as just another trade, guys. Because look what happens. If you look back, let's do this. Let me pull up the Dow Jones here. Let me show you guys something. So if gold is so much of a protection, risk off market, the market goes risk off, everybody goes to gold kind of idea, then that means anytime, that the stock market drops, you should have gold rising, right? So if we look here, we kind of zoom out a bit. Look at the weekly here on the Dow Jones. So this here was your great financial crisis. This was the peak there in 2007 going into 2008. And then if you go in here and you throw on, say, gold real quick. We'll just look at futures here, I guess. Dog it. Why am I having so much trouble? Here we go. That's why, because I've got it on crypto. Jeez, oh whiz. There. Nope. What the heck? We're not getting this right? It's GS, isn't it? Yeah, well, we'll do this. There we go. Nope. Why am I not finding this? What am I doing wrong here? My brain is completely fried. Let me see if I can find this real quick. GC, right? There we go. Jeez. I don't know why I had S there. I think I was thinking of silver at the same time. Silver starts with an S. Okay, so we throw on gold here. And look what actually happens. Gold comes up there, and so it does it for, and then at this point when everything goes to hell in a handbasket, gold drops off with that. Now if you look here and you add in the DXY as well, right here. Oh, wait, let me make sure I'm getting all these logarithmic as well here. So, we're looking through this. Again, at that initial point there, everything's kind of dropping with it. But look what happens with the dollar. The dollar itself shoots up. Everything drops until it doesn't, right? And then people get into the other one, right? Now, what's interesting here is that the drop, begins here in March of 08. And it finally reaches that point again here in February of 09. So it takes a year of a drop and move back up just to get where it was. And so at that point, when it finally gets back to this area where it was rising already, we've bottomed out here in the stock market and the stocks are heading up. So, when you look at this, if this starts dropping down and going to risk off and you jump into gold, what does that really do to you? I mean, for me, it makes more sense to sell your stocks up here, and instead of getting into gold, you buy your stocks a bunch lower here, and you get this move up, and you end up way further ahead than if you're just riding this gold here. So the idea that gold is, the people are just going to jump out of the market into gold because of that, whatever, I don't know. To me, it doesn't make as much sense. It doesn't, from a trading standpoint, it doesn't make a lot of sense. You can make a ton more money either shorting this down or buying here and heading up. And if you're jumping into gold here as this thing moves down, you're losing with it at first, and then it's going up back to your value here, and then you're kind of just doing this. And so it actually finally gets above this over here. So a year and a half later, after the drop, it's finally going above where it was. But by that way, you're already making significant inroads here with the stocks. So if I'm looking at that, again, to me, it just, gold is just another trade. The way it plays out. Let me see here. I'm going to catch up with you guys. Hey there, Telltale. Good to see you. Hey, what's up, Scott Melker? I see you here, man. Yeah, I was looking at, I couldn't, and once I saw that GS was Goldman, that was pulling Goldman Sachs there, it's like I couldn't get it out of my head. What the heck is the dang GC, the futures there? Yeah. So, I don't know, when you kind of look at this, Spooky DC says gold feels good in your hands. Hank says so does Play-Doh. But, guys, at the end of the day, I mean, I tend to look at the markets more from a, again, we get that socionomic angle than from, a whole, they're going here because of this going on the market and that. If anything, guys, you should have noticed over the last 10 years that things don't seem to hold out the same way as what it was thought prior to the GFC, prior to 2008. Over the last, I say 10 years because QE started in 2010. So, from that point, you notice that things don't work out the way they're expected most of the time. And so that becomes, a dangerous way of playing things. Because if you continue to think that things are going to work in a certain way, but they don't, they've shown you that they're not going to, and you do it anyway, I mean, how realistic are you being with the ideas of what you're doing? You're potentially really setting yourself up for big issues, in terms of loss and missed opportunity and stuff like that. So yeah, when I'm looking at that thing's there. Let me see here. But again, when you see things, I don't know. You look for these clues across the market. You look for this euphoria. You look for, okay, what really kind of, what's a good indicator of this euphoria that's going on, and ideas of just your retail traders. And when you start seeing stuff like that, then you go, okay, there's probably a top, like I said, if not the top, a local top of some sort coming in. And so, the whole laser eyes things was building up through here. And all of a sudden, everybody here, just a few days back, all of a sudden seems like everybody on Twitter has that in their profile, with their pictures. And sure enough, there goes that move down, right? Now, again, is this, right now, it seems like this is just a pullback before further higher. But we'll have to see how this continues to play out with what I was talking about earlier in the show here. How do you turn on pivots and supports in TradingView? If you want pivots, you just go up here to indicators and strategies, that little FX thing. And you can just go to built-ins. You can scroll down there. You can just go to pivot point standard. That's what I use. And it'll pull them up. When you have them in there, you can change the colors and thickness of the the lines and everything, label, font, all that stuff. Inputs, I keep it on traditional, but if you've never used them before, check out Camarilla DeMark, Classic, Woody, Fibonacci. They'll give you different fibs or different pivots. Remember, pivots are just they're just an idea of where support and resistance is. So depending on how you get them derived, whether it's using the Fibonacci, the Woody, the Classic, whatever method, your pivots will end up differently. But all they're really trying to do is show you where your general areas of support and resistance are. So I just prefer to use traditional, works out fine. Put your pivots time frame on auto. And then you can click this show historic pivots, and it gives you all the previous ones. And you can say how far you want it to go back here, increase or decrease that number. I don't see any real benefit myself anymore of using further ones back, so I just use the current ones on there. And it's really just to get a quick idea of a glance at the chart of where support and resistance is. But, generally these things are pretty easy to see once you've been doing this a while. You can see that this S1 pivot aligns with basically this resistance right here. And the pivot here, there's this dip here, boom, bounce back up. And so that area right there is where that pivot is. So, the longer you're in here, the more you look left and you start seeing where these things are potentially. Yeah. You're welcome. You're welcome. Yeah, I like them. Again, I just traded pivots for a few years back in the day. That's all I used. And so, basic areas of support and resistance, horizontal, are, a big part of my thing that I use when I'm looking at where pricing may be going, even when using things like Elliott Wave or something. Depending on the proximity of a projected count to a level, to a pivot level, kind of can give you an idea if it's going to overextend or maybe not hit the target exactly, depending on where that pivot is in relation to that target. So, but pivots are great. They become easier and easier to use the longer you do them, the more you get used to them. But if you're a trader, guys, you should always be looking left. And I say if you're a trader, if you look at the chart, you're probably a trader, right? Always look left. This tells you where things are happening. If you have the pro plan on TradingView here, or you have some other platform you're using, the VPVR over here is a great thing. It shows you interest levels at price levels. Where has price spent the most time? Or where? Yeah. So so the larger this is, the more time, in your area that's on the screen there, that price is spent at that level. So if we look at this right here, from back here around the 2nd of February till now, price has spent the most time right here at about $47,893.26 here on Coinbase. So that's a significant area. If you're under that, you should expect that to work as resistance. If you're on top of that, you should expect that to act as support. Doesn't mean price can't move through it, but it means if you're on top of it, you're going to get some extra help with support. If you're below it, you're going to get some extra resistance in that area. And you'll have to have more demand to push it up through it, or more supply to push it down through it. So these couple of things, really can kind of help you just get out the basics of vertical, of your horizontal. Remember, guys, if price looks like it's moving diagonally, price is really just moving vertically. Time sets that vertical over a little bit. So generally, price is doing this, on top of each other. That's all it's doing. In the absence of time, this is what we would see. But because of time, that means it closes a little bit further over. Close a little bit further over. And then you start getting these, diagonal supports and resistances, which are okay to watch, but your ultimate supports and resistances are going to be these things, these horizontals. That's where you want to watch more than anything else, because price moves vertically. Time just skews it sideways, diagonally. So when you really kind of grasp that, it sometimes takes a little bit first for somebody to really grasp that, but when you do, all of a sudden the ideas of pivots and the VPVR here really kick in, or even your session volume, which again just gives you, where the price is spent the most time during the day, during the trading day. Let me see here. Could the pullback today just be an ABC and a final fifth wave higher coming? Yeah, Cody. That's what I talked about earlier. Right now, it's done enough here. I've got a 5 count coming down off here to be an ABC and done. But we need to see, you want to see it get above this wave B up here, this 55,000, 55,050 area. You want price to get above that to really say, okay, I think the ABC's done and we're headed up. As long as it still remains below that wave B, it's still significantly vulnerable to falling down further. And if it falls down further, again, you start getting down there toward 36,000 or something, then this starts looking more like a 1, 2, 3 rather than an ABC. For right now, though, you know, I'm thinking ABC at the moment. And we'll see how this pulls up. And again, you know, if you look at, so we've looked at a couple of different kind of ideas on this move up of how price could be playing out here. And this is one I keep coming back to, this 1, 2, 1, 2 idea. And so in that case, you know, it's possible that this top up here at 58,000 could either be the blue 3, which is the interior 3 of the red 3, so 3 of 3, or it could be the red 3. You know, you could have like a 1, 2, 3, 4, 5, and then you have a 1, 2, 3, 4, 5 with the red here. And so, you know, again, all you're going to do is kind of pull this here and you go, well, if it's the blue one, at this point now we've hit the 50% area. Now, normally for a wave 4, you look for a 38.2 pullback, right? You look for price to pull back 38.2% of wave 3 initially. But, and then that would have kind of been this one here. But if it continues going down, 50% is still a solid wave 4. Now, when you start getting below that 50%, then you start leaning toward maybe it's not a wave 4, maybe it's a wave 2. Or it's some other larger kind of correction. But ultimately, wave 4 just needs to, for most times, terminate prior to entering wave 1. So, you know, this could be wave 4 coming all the way down here toward 38,700 and still be a very valid wave 4. The other thought is, okay, maybe this is, again, it's the red 3 and the red 4 that's playing out here, right? So we take this down here. So now we have this red 3 here. And so right now, price is pulled between the 38.2 and the 50% of that. So, you know, if it's to continue to go from where it's at right here, then your idea, I think, locally here is that it's either 4 of 3 or 4. You know, it's either 1, 2, 3, 4, and we got 5 coming up, or it's, you know, 1, 2, and then 1, 2, 3, 4, 5 of 1, 2, 3. Let me see here. You know, it's 5 of 3 there. So either this is the red 3 here, or this, you know, or this move up here would be the red 3. It'd be 5 of the red 3. And if it's this, then, you know, what you would expect is wave 4 to come back down around this $47,000, $46,000 area again, and then go up for wave 5 a little bit higher up. But that's just this locally here. That doesn't take into account what this whole thing may be overall. But again, it really starts, once you're continuing down here toward this 36,000 area, at that point, I think if you still want to see this as a 4, I think, you know, that impedes on wave 1 here. So you really start looking at that as the red wave 4. If you're to get down here below this, right here at about 33,867 up here, if you were to get down into that, I mean, at that point, you're looking at, I'm counting this as a much larger correction. I'm considering this is a 5 of some sort, whether it's 5 of a large 3 or if it's 5 of 5 or whatever. I think you've got a larger correction coming in. And so, you know, playing with that, because that kind of, once you're dipping back down into this 1 here, that kind of says, well, we're kind of probably done with that wave up there. Onyx King, hey, yeah, you're welcome, man. Yeah, I definitely understand. Not necessarily your belief. Yeah, and that's the important thing. You want to have these what ifs going through your head, guys. If you're trading and you're not really ever asking yourself, well, what if I'm wrong? What does that mean? Then you're probably losing a lot more money than you need to. If you're asking yourself, well, you know, you go and you say, okay, well, I've got this idea that says price should be going to level A, whatever it is. If you've got that, okay, that's great, except what if price doesn't do that? And so if price doesn't do it, you need to have some ideas of, okay, at what point do I start saying, well, the idea that I have is probably not going to happen? You got to know where these invalidation levels are. They are just as important as your validation levels, because it means that you don't just sit in there holding onto something. You know, you've done your homework. You've kind of looked at it. Right or wrong, you may be, but at least you've got something that you're thinking about. Now, if this is the bottom here, if this is like a 4, and then we've either got a blue 5 or you know, a red 5, the two targets I have here are 61,031 and 62,958. Those are kind of what I have at the moment here. So, you know, again, if this is a blue 4 here, you know, I'd expect to get the blue 5 up there around 61,031. Then you get this pullback down here toward, you know, 47,000. And then you get this move up here for the red 5 at 62,958. As it's moving up there, because that would be your 5 there on that. So those are the two levels I'm watching, as long as price doesn't drop below the swing low. Those are my two upper points that I'm watching. If it drops below that, then, you know, again, rewind to the beginning of the session here, where I gave you those lower targets that we might be looking at, depending on how that plays out there. Let me see here. How many final blow-offs top does what make now? Oh, Cody was asking, would think that the Nasdaq also does an ABC right here with the Bitcoin and has a final fifth blow-off wave. Well, I mean, it's possible, but if we look at the Nasdaq, let me kind of pull up the Nasdaq again here. Let me zoom out here a little bit more on the, get rid of everything here. I mean, in order for this to be an ABC, where's your ABC? Are you thinking this is an A and this is a B, and then this is somehow maybe a 1, 2, 3, 4, 5 maybe? Possible, long C. But some of the things we watch, if the count is correct coming up here, then we've declined below this wave 4 here. See, this would be wave 3, this would be wave 4, and this would be wave 5. So in that respect, you couldn't have this as a 3 of 4 and then a 1, 2, 3, 4, 5 of 5. So in order for your idea to be correct, that this is an ABC coming down, you'd probably have to look at this as a 1 here. So your 3, your 4, and then this is 1 of 5. Whoops. 1 of 5 here. So this would be a 1, 2, 3, 4, 5. So if that's the case, then if you're looking at that, you would assume, again, that this is 1 here and this is 2 on the pullback. So you would look for that, generally, the pullback here toward, oh, I've got that already there, at least the 61.8. You'd still be looking for this at least get down here around 11,900, potentially 11,600 area here. Maybe even to fill in the gap right here, 11,359. So this would have to be a 1, 2, 3 of 5 then working its way up. That's still a possibility. But if you continue to come down here and you get below this wave 4, then you run into the same issue you get below this wave 4 here. And what that says is this is no longer a 1, 2 of 5. This is 5. Need to pull back. Which means then this whole thing coming up from, let me see here. Oh, let me see here. Oh, I didn't change this on this lower one here. But anyway, this whole thing coming up from for March here or whatever. I've got to update this count here. But it means that this all becomes a 1, and you have a larger 2 pullback and then a 3. So, again, when you're hitting those 4s, that's kind of turning it off and saying you've got to go to the next 4 lower, larger 4 lower down to kind of get going with that next bit. I got to go back in there and update that. So, yeah. So, I mean, in terms of could this be an ABC right here, if the count is correct, then no, that wouldn't make sense. Because, again, it's dropped down below the 4 here, so it couldn't just be a 1, ABC for a 2, and then up. But you could look at it as being potentially 1, a 5 here, in which case, again, you'd be looking for it to get back down here toward 11,800 or even a little bit lower there as your ABC for your 2 here. So 1, 2, 3, 4, 5 going up. So, yeah, I think that's how you'd have to look at it there. Hey there, Alan. Good to see you. Mark, what's going on, man? He says the 1 to 5 count in his analysis type. What is it called? Oh, it's Elliott Wave. It's Elliott Wave. Elliott Wave theory, yeah. So yeah, Elliott Wave. It's one of those things that takes a while to really do it, and you never become perfect at it. I think I do something. A lot of people when they're new traders, they come into Elliott Wave because it gives you projections. To me, the biggest benefit you get from Elliott Wave is an understanding of how price action generally works. We know that generally with Elliott Wave, price is going to move up in 5 waves. And after that, we know generally it's going to pull back in 3 waves. And then it's going to go up in 5 more waves. And, and we know that this kind of works out this way. We know that when you're correcting, you can either have a simple A, B, C zigzag, or you can have a double zigzag, so A, B, C, and then A, B, C, or some variation of that, continuing to do that. We know that you can print a triangle, so A, B, C is A, B, C is B, C is C, and there are all these ABCs here, D, and then price moves out, right? So we know that this is another way that price could be correcting here. We know that you could have a flat. We know that price could do this thing where it goes A, B, C down for A, B, C up for B, and then 1, 2, 3, 4, 5 down for C, and then go up. So then you just get basically this this kind of trading range thing going on here. And so what it does, I think one of the best things it does when you really start to learn Elliott Wave is it takes away a lot of the fear in what's going on. You get an idea of where tops may be forming and why. It's hitting the certain extensions. We know if it's a wave 3, it's going to be the 1.618 usually. We know that usually wave 4 pulls back 38.2. We know that wave 5 then usually extends 61.8. And so it just helps alleviate a lot of the fear. A lot of what hurts new traders in the markets is this fear of the unknown. They don't know what's going on. They don't know what's going to happen. Price starts dropping off and they just sell because they've got no clue, right? How should that sell-off operate? What are we looking for? And sadly, they often end up selling off when you get 5 waves down. And, and again, this is what normally happens. They buy at the tops and sell at the bottoms. So learning Elliott Wave kind of gives you a lot of help with all this. But for me, I think the biggest point about, besides having an understanding, especially of corrections, is this idea of validation, invalidation levels. We know that if you've got 5 waves up for wave 1, then we know wave 2 is going to be 3 waves, most likely, and it will not drop below wave 1. We know that if we think this is a 1 and what we thought is wave 2 drops below where wave 1 starts, we know this is not wave 1. So invalidation level, at the beginning of your wave 1 there. We know that if you've got 1, 2, 3, and 4, and we know 4 should end above wave 1, and you get your 5, right? And we know that if it drops down into wave 1, then the only way we can really do that is if this is an ending or a leading diagonal. So either the first 5 waves or the last 5 waves. If it's not one of those, then we know that this is not a 1, 2, 3, 4, 5. We know this is probably just a 1, 2, 1, 2, 3, 4, 5 gives you 3, 4, 5. So I think one of the important things about Elliott Wave is getting this idea of where your invalidation levels are. Because that's one thing that most new traders don't know, right? How do I know when I'm wrong? What should I be looking for? Where should I be looking? And that helps you kind of figure these things out when you're doing that. So and again, the extensions, again, wave 3 is usually going to be the 1618, so, if you do like this, say this is your 5 here, and you go, okay, well, I don't know why I'm doing this. I'll just do this real quick here. We've got a whole lot of this in our educational section, guys, at howtotradetowin.com. Matter of fact, for Tier 3 members, we spent an hour last week talking about how to identify wave 3s. But if we know this is a 1 and this is a 2, then we know that wave 3 should generally be targeting this area here. And wave 4 would generally be right there, and then wave 5 would generally be right here. Now, it doesn't mean that's going to be exactly where they go, but we know that from a perspective of, okay, we're getting in, and if I think this is a 1 and a 2, then I'm expecting wave 3 at least to reach this area. If it stops before then, again, then I start looking at, okay, especially if we don't have this up here, if it gets to this 100%, then I know that this is maybe an ABC rather than a 1, 2, 3. And if price then comes down below this point, again, this validation level here, that validates this as an ABC. But if it just pulls back a bit here and then heads higher, well, now all of a sudden I go, okay, well, there's a 1, 2, and this is the beginning of wave 3. This is 1, 2, 3 of wave 3. So again, the idea here is that Elliott Wave helps you understand that there is a form to the way that price action moves. And, if you know what to expect generally, then there's a whole lot less fear in entering the market. And that's a good thing for traders. It means that you start finding better areas to potentially enter. You start getting better invalidation levels, points at which you know that at that point, it's definitely not going to be what I think it is. And that's, guys, you're going to be wrong more than you're ever going to be right as a trader. So the more that you work on your risk management, which includes understanding where your validation and invalidation levels are, the more success you can create for yourself. The less money that you can lose, which means the longer you can be in the game, which means more of a chance of getting those bigger moves that you want to get. Mark, you're welcome, man. You're welcome. Let's see here. John D says fibs are very important in general. They are, yeah. Dow theory states that 50% pullbacks. So that's why on the fib levels, you see that the 50% is not actually a Fibonacci level, but it's an important level. Again, Dow theory looks at the whole idea that your pullbacks will be at least 50% kind of idea. But yeah, fibs in general. By the way, guys, just in general, if you pull up your fibs, the most important ones you want to use are your 38.2 and your 61.8. Now, if you're in Bitcoin, in cryptos in general, 70.5 is another really strong level to use. This is more of an institutional algo level, 70.5. But those are really the ones that are most important. So even if you don't know what you're doing with the Elliott Wave, as far as fibs go, you've got areas to look back. If you have a strong move up and then you get a pullback, you go, man, where's that pullback going to be? Let's say we kind of do it from here and we get this big move down. Well, initially you're going to want to look at that 38.2. And as you can see here, you got a little bit of a wick down here on the 4 hour, but really most of it's contained right there at the 38.2. If you pull it from the low down here to that high. And so if it continues down and, kind of wicked on down toward the 50, but if it continues down below that, then, generally you want to look at the 61.8. And like I said, maybe the 70.5. So again, that right there just already gives you general areas you can watch and a better understanding of where price action may be headed, or at least what to look for where it may be headed. Let's see here. FarmD says Bitcoin Weekly looks like we are coming down towards the exponential on curve support starting December 8th of 18. The next touch is March 9th of 20. Let's see here. What'd you say? December 10th of 18? Gosh, dog it. Can't get, there we go. Should be this area over here, right? Yeah. So I think what you're talking about, FarmD, is you're talking about pulling this here. I can't even do this. Something like this. What were you saying there? Something like that, though, right? You're talking about a curve coming off like that. You said the next touch there was March 9th. That should be this right here, yeah. Yeah, you know, coming down toward it there, sure. You know, got a lot of room to kind of potentially fall back in here and then a move up and then a break, potentially. My curve may not be the same as yours there. I just drew a simple curve from that point to that point. Pulled it up there. But, I mean, in the grand scheme of things, you know, it's nothing different than what we've been talking about, which is the idea that we've got this large range right here. And so from this large range, what are we doing, you know? I mean, it would, you know, I look at this and I go, man, wouldn't that be something if you get basically your buying climax here and then you get your automatic reaction down here. And this becomes a secondary test and a pullback. And this just becomes some large upthrust. And so at the end of the day, you know, basically this is your phase A. And this right here is still phase B. You know, wouldn't that be something? Now, in terms of that, if that were to happen, you would expect generally for price to come on back down toward this mid-range here to print a higher low off that to give you a last point of support. I mean, it could bounce off the top here, in this 20,000 area, 21,000 area. But most often you expect this pullback here. The other thought being, well, maybe it comes back to a dip below this ring and it gives you a spring. And then it heads up. You know, something like this. We're looking in terms of Wyckoff here. That's on this much larger scale. But, you know, this is a strong move up. You know, it's a very strong move up here. So, you know, I don't know that I necessarily hold that that's something that, you know, I was a lot more willing to look at something like that when we were, you know, in this lower area here coming up to the all-time high. But once you really start getting to 30,000, 32,000, I think it potentially becomes less and less likely. Now, that doesn't mean it's not, or it doesn't mean it's unlikely. It just means that it becomes less and less likely. But, you know, again, the thing, normally we wouldn't see, you know, in stocks, we generally don't see such a large upthrust. But maybe, you know, when we look at this, maybe this is a product of the illiquidity of the Bitcoin market. So you get these strong, you know, these larger, stronger moves. So I would be interested in at least seeing a pullback toward, you know, this previous resistance and support, if not down through it, you know, as it kind of does its thing here. But even that's not bearish. I know you guys go, oh my God, that's a drop from, you know, whatever, almost 60,000 up here down to, say, 8,000. Oh my gosh, it's so bearish. You know, to me, I look at it in terms of this right here, and it's just corrective off this, you know, something like that. So if you were to have, you know, this move on down here, and then that move back up, to me, that's not bearish. I mean, I guess if you look locally, you'd say it is. If you look at the actual definition of bearishness, you know, a 20% drop, yeah, you know, it's bearish. But when I look at this in the grand scheme of things, look at this big picture, you know, you're printing higher lows, low, high, higher low, higher high, higher low. You know, to me, this is a bullish structure. That would be a gift to be able to buy down there, right? Be a gift to be able to buy down here. This would be a spring. Now, I'm not saying right now that I really think this has as much of a chance as happening as it did prior to this big, large move up. But again, you know, if we get the pullback at least to this previous all-time high here, and then if we see price kind of dipping in there, then this becomes more and more possible. You know, again, and that could just be a product, again, of the illiquidity of the market. You got people that come in with their big buys and they're able to really push price far and fast. So this becomes a spring, and then it moves up. So you get phase A, phase B, phase C, phase D is the interior markup, phase E is the exterior markup. In terms of Elliott Wave, you know, that would have to be that whole idea of an expanded flat. So ABC down, ABC up, and then 5 down below where wave A terminated. That just gives you an expanded flat. But again, the thing that really draws me off is this is a very large extension above this previous high. So, you know, while I can't say it's not possible, I can't say it's impossible, right now I tend to lean toward the idea that if we have a pullback, you know, it'll either be toward this 20,000 or down here maybe toward 7,000 or 8,000, just giving us a, you know, a higher low before it heads up there. Out of the options you've told that could happen with Bitcoin, have any of them got invalidated by now? Sure, the triangle. Yeah. You know, we were looking at the possibility if this is an ABC and this was an ABC, or, you know, ABC, ABC, ABC. You know, kind of looking at this, is this going to be a triangle here? A, B, C. I mean, I don't think it's a great thing. I don't think this is an A, a B, a C, a D, and an E here, and then an up. I don't think so. I think the triangle idea is pretty much out, as never having happened there. But yeah, you know, can it not? You know, we got people saying, "Oh, you'll never see 20,000 again. You'll never see 30,000 again." It's just a bunch of nonsense. You know, right now, heck, we're only what, about 15,000, 16,000 from 30,000. You know, we're almost halfway the distance that we were between, you know, the top there, the 58,000 some change and 30,000. We're already halfway there. And most of that's happened in a matter of hours, most of that drop. So, you know, those ideas I think are silly. But when we look at larger structures and whatnot, you know, I think there's definitely a possibility we could see 20,000, maybe even 7,000 to 8,000, maybe. And if we get down here and it continues going down, well, then the odds really start increasing that we might get that dip below this area over here, which again would just end up being, you know, an expanded flat type thing, is what it would have to be. Again, this would have to be an ABC down here and then an ABC up here and then 5 down below if it was to do that. Yeah, there's the triangles. They're A, B, C, D, E. You know, it's 5 waves, A, B, C, D, E. And each wave is only 3 waves. So wave A is an A, B, C. Wave B is an A, B, C, kind of like I drew it earlier. And so this would have to be, you know, you can get your A, B, C here. That's fine. Maybe you can get an A, B, C here, maybe. You can definitely get an A, B, C here. And then you have to get an ABC here and then an ABC here. And, you know, this is, I mean, even though your wave E's are usually pretty short, this is really short compared to the other waves here. And so it just, again, it doesn't have that right look. A lot of Elliott Wave is the look. Does it look correct? Which has a lot to do with proportions, proportionality, geometry of how it all is. So, yeah. Yeah. We can actually. It says we can't have an expanded flat because we broke the 123.6. 123.6 is the general expected target. It's like the 1618, the 161.8 for wave 3, or the 38.2 for wave 4, or the 78.6 or 61.8 for wave 2. 123.6 is not a rule, it's a guideline. It's usually where we look. But we often, especially in crypto, we'll extend beyond that. The question is, this is a large extension above it. And that's what gives me pause, is because it's so large. But again, when you're talking about illiquid markets like Bitcoin, there is the possibility that your waves will extend further and deeper than what you normally would expect in a more liquid market, like say Forex or something. So yeah. But 123.6, guys, is a guideline, like the 161.8 for wave 3 or something like that. It's not a rule. Rules are things like wave 2 cannot drop below wave 1. Wave 4 cannot drop below wave 2. Wave 3 cannot be the shortest of waves 1, 3, and 5. Those are rules. Those absolutely cannot be, ignored. But 123.6 is just generally where we usually expect, an expanded flat wave B to target. So yeah. Does institutional, what's going on, Jay? I'm sorry, is that Joy? Joy, what's going on? It says, does institutional involvement in Bitcoin somewhat minimize these larger swings below 20? Only if you believe they're going to buy. But again, a lot of the way people kind of view, retail traders view institutional is what they want to happen. They assume, they're not going to let it go down that low. Well, the institutions are more interested in buying pullbacks, and they're not interested in really front running them. They create, that's what creates the ranges. Why you have the ranges at the top. They're selling in a range. The top is a range, not the highest price. The highest price is just an event. So same thing with the lows. If you're getting down toward these low areas, your institutions will be buying and selling to create that range, so they can keep you thinking you need to sell, so they can continue to buy until they're filled. Or at the top, they'll sell and buy to keep the range going, so it convinces you to keep buying, so they can continue to fill all their cells and they can distribute. But your absolute highest price, your absolute lowest price are just events. Retail considers those tops or bottoms, but those are events. Your tops and your bottoms are your ranges, guys. Kind of like these green boxes I have here. This is your distribution. This is your top. This is your bottom. This is your top. And see, it's not the single point. It's that range there where price kind of moves back and forth within a range. And the only difference is that your large players are, they buy and sell here to keep this range going, but they're net sellers overall. Overall, they sell more than they buy in this area. And it's the opposite at the bottoms. They're net buyers. They buy, sell, buy, sell, buy, sell, until the market shows them that the market's ready to go. And then they let it go. But they're net buyers. They're going to buy more in this area than they are going to sell. So that's what we're kind of looking at there. So yeah, that's what I'm kind of, these wave rules are within the education center. Yeah. When we've actually got a video section on Elliott Wave that teaches you what the rules are, what the guidelines are, and how the again, everything I was kind of showing here and a whole lot more about how the wave structures go and how they move and whatever. So yeah, we definitely have all of that in there. But yeah, so anyway, guys, I need to get out of here. It's after 1. I've been here a couple hours with you. My voice is definitely going out. You can probably hear it a little bit. But, importantly, locally right now, guys, as long as we're above the swing low here, we should be looking at potentially ABC done. If we can get above that 55,000 up here, 55,050 kind of area, then that should give us a lot more confidence that this ABC is done. But if we're dropping below here, then we look at the targets I was talking about earlier, and we kind of see, okay, is this still just an ABC coming down, or are we getting maybe like a 1, 2, 3, 4, 5. You know, everybody's expecting blow off top. Do we get the blow off top? Maybe not. Maybe it's not a blow off top. Maybe it's more what's the term? It's more selling that's structured instead of just a sudden throw into all the FOMO. For right now, I think we've still got further upside, so we'll see. But again, I'm still watching those downside areas for those bounces, those reversals coming off there. So, all right, guys. Anyway, you guys have a great day. Thanks a lot for joining in with me, the questions and the comments and everything. You know, guys, the one thing I just want you to get through and to really understand is that at the end of the day, nobody knows for sure what is going to happen with anything in the financial markets, okay? If anybody's guaranteeing you anything, walk away. It's not worth your time. They may or may not be right, but if they are, it's going to be luck. There are no guarantees in trading. It's called speculation for a reason. That means there is always risk. And that's why, again, as I always say, the most important thing you'll ever do day in and day out as a trader is your risk management. The only thing you control in the market is how much you lose, all right? So that should be the most important thing you do. Not these projections where price may be going, but understand how to properly apply risk management. And then you can do the other stuff. Because if you can't do the risk management part, you may get lucky with a trade and make a buttload of money, but it's not going to stay with you very long because you'll end up losing it back into the market because you're not doing the things you have to do to protect yourself. Rule number 1, protect your capital. Rule number 2, grow it, all right? You guys have a great day. Take care. If you'd like to join us, we'd love to have you here at howtotradetowin.com. I've got to say, guys, I got to say, we've probably got the greatest community of traders out there. Very knowledgeable, always willing to help, always willing to answer questions. Nobody's ever made to feel like an idiot. And so it's just a great place to be. I'm real fortunate to have such an amazing group of people with us. So hopefully you guys will join too. If not, we'll be back on Friday, guys. All right, 11 a.m. Central Standard Time. Until then, trade safe. Take care.